Imagine there's a room in New York where complete strangers decide how much the world's biggest companies are worth. They've never visited those companies, never met the CEOs, and yet every single day they buy and sell billions of dollars worth of businesses. What's even stranger? Nobody is exchanging paper certificates anymore. Everything exists as numbers on a screen, and somehow the entire global economy trusts those numbers. That system is called the stock market. At first, it sounds incredibly complicated, but the truth is, it's based on one very simple idea. Imagine you and 4 friends want to open a lemonade stand. It costs $1,000 to get started, but none of you has enough money alone. So each person contributes $200. Now each of you owns 20% of the business. That 20% is called a share. A share is simply a small piece of ownership. If the lemonade stand makes money, every owner receives a share of the profits. If the business grows, the value of everyone's share grows too. Now replace that lemonade stand with Apple, Tesla, or Amazon. The idea doesn't change, only the size does. When a company wants to grow, it needs money. It can borrow money from a bank and pay it back with interest, or it can sell small pieces of ownership to the public. The first time it does that is called an initial public offering, or IPO. Think of it like cutting a giant pizza into millions of slices and offering those slices to anyone who wants to buy them. But here's something most people don't know. After the IPO, the company usually doesn't receive your money anymore. When you buy a company's stock today, your money usually goes to another investor who already owned that share. You're simply buying their piece of the company. So what decides the price of a stock? The answer is surprisingly simple. Supply and demand. If more people want to buy than sell, the price goes up. If more people want to sell than buy, the price goes down. There is no secret committee deciding what a company is worth every second. The market price is simply the last price that one buyer and one seller agreed on. That means the stock market isn't just measuring value. It's measuring belief. If millions of people believe a company has a bright future, they'll pay more for its shares. If fear spreads and people lose confidence, they'll start selling, and prices can fall in minutes even if the company itself hasn't changed. Now here's the surprising part. Most stock trades today aren't made by humans. They're made by powerful computers running algorithms that buy and sell thousands of times every second. These machines don't care about the company's products or its future. They only look for tiny price differences they can exploit before another computer does. Imagine your lemonade stand again, except instead of people deciding what it is worth, thousands of super-fast robots are changing the price every second without ever tasting your lemonade. That's the modern stock market. You may have heard people say that the stock market always goes up. That's only partly true. Over very long periods, the market has historically grown, but the journey is far from smooth. In 2008, global markets lost more than half their value during the financial crisis. In 2020, markets crashed within weeks when the pandemic began, before recovering later. If you needed your money during those crashes, those losses were very real. That's why successful investing isn't about getting rich overnight. It's about patience and time. Here's one final fact that surprises almost everyone. When you hear that a company is worth $2 trillion, it doesn't mean there's $2 trillion sitting in a giant vault. That number is simply today's share price multiplied by the total number of shares. If everyone tried to sell at the same time, there wouldn't be enough buyers at that price, and the value would fall quickly. In other words, the stock market runs on confidence. As long as people believe, prices stay high. When confidence disappears, prices can change faster than most people imagine. So, is the stock market a scam? No. Is it a guaranteed money-making machine? Also, no. It's simply a marketplace where millions of people try to predict the future by buying and selling tiny pieces of businesses. Sometimes they're right, sometimes they're spectacularly wrong. The most successful investors understand one simple truth: price and value are not always the same thing. The next time you hear that the stock market gained or lost billions of dollars in a single day, remember, what really changed wasn't just the numbers. It was what millions of people believed about the future.